So what are the conditions that the ownership interest will be considered as a participation interest and the previously discussed incomes as exempt incomes? The first condition is the ownership threshold. The ownership of this interest should be more than 5% of the capital, and there must be real economic ownership. The participation must have available profits for distribution of at least 5%. The proceeds upon liquidation must not be less than 5% of the ownership value. The second condition is that there must be an intention to hold this ownership for more than 12 months. There may be a scenario where within 3 months you're having to file your tax returns and you haven't held it for 12 months yet, and you're deciding would this be considered as a participation interest or no. The focus here is on intent, and in any case you will only be filing the returns 9 months after the financial year end, which would by then give you sufficient clarity on if the intention existed at the time of financial year end. The third condition is that the jurisdiction in which the participation exists must have a tax rate of no less than 9%, and it must be of a similar character. Finally, we have anti-avoidance rules too, which is that not more than 50% of the assets of the participation interest should be non-qualifying assets. This is simply to avoid companies to create shell companies in foreign jurisdictions simply to bypass the participation exemption rules. The participation exemption is designed to avoid double taxation and is extremely relevant for businesses that have ownership interests not just in UAE but also abroad. Hope this video gave you a better understanding of what a participation interest is and what are the conditions that need to be met in order to ensure that this participation exemption is applicable to your company.